Federal Reserve Chairman Jerome Powell announcing the Fed choosing to leave interest rates unchanged at the end of its two-day policy meeting yesterday. Yahoo Finance's Cheung was in the room with the Fed chair, and he joins us with much more. Brian, you're in another room today, but let's talk about exactly what you asked the Fed chair and what he said.
Yeah, well, obviously, as you mentioned, it was Jerome Powell who made the decision, along with the FOMC yesterday, to keep rates unchanged at the current target range of 2.25 to 2.5%. But an interesting question was that Powell actually sees decent growth for the economy going forward, even though that the U.S. Did clock in at 3.2% GDP for the first quarter. A lot of that, some critics saying, is due to increased government spending, a temporary juice in net exports. But Jerome Powell saying that consumption and business fixed investment could pick up in the coming quarters, meaning that GDP growth could come in much higher than 2.1% that the FOMC projected in its March meeting. Here's what Jerome Powell had to say in response to that.
Well, we don't see any evidence at all of overheating, for one thing. We see inflation below 2% now, as I mentioned, pretty close to 2% for most of last year. So really no signs of overheating. If you look at the labor market, for a long time now, there have been anecdotal reports of labor shortages and difficulty in finding skilled labor and that kind of thing. Nonetheless, you have very strong job creation, and you have wages moving up at a rate that is appropriate given inflation and given productivity, but not at all signaling any overheating at all.
So in saying that he does not see any sort of overheating, Powell could be hinting that there probably isn't much of an argument for a rate hike, and that the next move, if anything, might not be that. Again, Powell saying yesterday that he doesn't see the risk tilting one way or the other, but it is worth mentioning that Powell's comments do come as the Federal Reserve is closely watched for the possibility of a rate cut going forward. Currently, at the moment, I am in California, where there's going to be a big monetary policy conference tomorrow where the Vice Chairman Richard Clarida will be speaking, and we'll see if any of these Fed officials have any sort of added color to add in response to that meeting yesterday.
Okay, thanks for that. Brian Cheung bringing us the very latest on that front. And now we've got Danielle DiMartino, Booth Quill, Intelligence CEO and former advisor to the president of the Dallas Federal Reserve. And she's here with us with our panel. I want to start on the question of inflation, because that is the big overhang here. We heard Jerome Powell say that he believes this is transitory. I see you kind of shaking your head here, but it's not just that the inflation has been flat. I mean, it's been going in the opposite direction.
It has, but people should try and realize that there's been a lot of debate and skepticism, even among those on the FOMC, because a lot of them recognized coming out of the last crisis that the Fed was using the wrong inflation metric to begin with. They use reimbursement rates that the government provides for Medicare and Medicaid to estimate health care. So the number's always going to be skewed downwards. Even if you look at core CPI, for example, that's been at 2% or above 2% for 13 months running now. So I think the inflation debate in and of itself is and even if you look back at transcripts from 2012 and 2013, Jay Powell himself was skeptical about that. So I see right now Fed members is hiding behind a broken inflation metric in order to maintain their stance, their dovish stance.
So if the metric is broken, I mean, where are we closer to? If you change that,
we're
where are we
closer to 2%, but that has nothing to do with, I think, where the Fed wants to be. I think what was most shocking yesterday, especially, it's going to be all eyes on Rich Clarida, because Rich Clarida has publicly brought up the idea of an insurance rate cut. He said that he brought up the examples of 95 and 98 when the Fed tried to get out in front of a potential recession and reduced rates. And I think the reason we're seeing markets as upset as they are is because despite the fact that the Fed should theoretically, if they used a better inflation metric, be raising rates right now, the market just wants to know about that rate cut. Right. We've gone from a 70% probability of a rate cut by the end of the year to 45% today. So the market is throwing a gigantic hissy fit right now.
Yeah, as you said, Danielle, the markets are upset. Yesterday, I think we saw the market go down 1% in just 1 hour after his comments. And, I think something like in 9 out of 10 Powell meetings, we've seen the market go down. Now, obviously, is he paying attention to this? Is it something he should be? I mean, it's not on him to worry about that. And yet, when you have someone like President Trump tweeting right before the comments, we should see a rate cut, obviously, he can't ignore that. So how does that
he
fit into
can't,
things?
but for him, it's like chewing glass. Every time somebody asks him a question about politics and whether it plays into Fed thinking, you can just see the expression on his face. In fact, yesterday, I think he was so determined yesterday to make it quick and dirty and get off and not even appear to be kowtowing to Trump. I mean, he had a 6.5-minute statement. He had a 41-minute press conference that broke all of his records in terms of brevity. He just wanted to get in and get out. And I would not be surprised to hear the idea of an insurance rate cut from Clarida come back into the dialogue tomorrow. Jay Powell was not going to appear to be kowtowing to the president yesterday, and I think that's the message.
So the messaging is one thing, but I also look at the market reaction and wonder if there's too much reliance on the Fed. I mean, the Fed being seen as the only tool right now in the face of questions about where the economy is headed, and yet there's not a lot of room for the Fed to move.
There's not a lot of room for the Fed to move, and that's why calls for a 50 basis point or a 100 basis point initial cut. When you think about that, every single Fed easing cycle, once they make that first cut, going back to 1970, you get a cut every single month that follows. We could be talking about quantitative easing on Election Day, and I think that's exactly where the president is headed with this, because the Fed has so little ammunition, so little room to work with. We'd be better off, obviously, waiting until we had great big flashing recession signs, but that's not where the administration wants the Fed to be.
So right now we're obviously pretty far away from 2020, although it's kind of creeping up, and the kind of political attacks on the Fed are already higher than I've ever seen them before.
Well, they're certainly more public.
Certainly more public.
I mean, Lyndon Baines Johnson was, threw
calls
McChesney up against a wall at his
he wasn't
ranch.
tweeting.
But
No, there was no Twitter.
So I guess,
imagine LBJ on Twitter.
my God.
Anyways.
But my question would be, what are we going to see as this kind of approaches that fever pitch of 2020? Is it going to just be incredibly difficult for Powell to maintain his composure and not look like a hostage up there, as he's taking questions and dealing with this?
But bear in mind, Trump is getting backlash from his own party. I'm not trying to make a political statement, but a month ago, 3 weeks ago, I think more would have been confirmed by the Senate. And now that Kaine is out of the picture, now we've got 3 senators who are saying that they would not vote for more. So I think that is his party's gentle way of saying, if you keep muscling in on the Fed, which we've asked you not to do, because if you ask the Senate, they're saying we want for the Fed to maintain its independence. And obviously Trump is going against his own party. So there's going to be pull and sway. If he ever wants to fill those vacancies on the Federal Open Market Committee, Trump might have to step back his rhetoric. Not that I plan on that, but he needs to.
Okay. Something tells me he won't, but we'll
yes.
we'll continue to follow that. Thanks for that, Danielle DiMartino Booth joining us here on set.